Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Good afternoon.
Well, U.S. stocks, of course, have seen this amazing V-shaped recovery since the March low. They were mixed on Monday, but we see the S&P and the Dow posting their best August since the 1980s. Tell us about the global markets today.
Yes, if you look at the Dow Jones, it did decline yesterday by about 0.8%, and also S&P 500 shedded about 0.2%. In the contrast, Nasdaq added about 0.7% to reach 11,776. But overall, if you look at the month performance, as you said, Dow Jones jumped 7.6%, S&P 500 jumped 7%, Nasdaq jumped 9.6%, and these are record high number of rise in a 1 month period. If you look at the overall Wall Street, it seems to show some signaling that is mixed signals are shown because that these indices have risen quite significantly. And we're looking at some of the macro numbers and how the economic recovery is planning out. The Fed Reserve Vice Chairman Richard Clarida said that rates will not go up just because the jobless rate swings down. Currently, the jobless rate, unemployment ratio is at 10.2%. We doubt that the Fed will change their rates until the unemployment ratio goes down to below 5%. If that's the case, we think that the overall environment is going to continue to be positive for the equity market. The Treasury yield seems to be fairly stable at around 0.7% for a 10 years government bond. And if it remains to be that kind of level, and also the currency level remains to be at where it is, around 92, 93 territories, overall liquidity will be ample enough and the overall financial conditions will be positive enough that the equity will continue to show a rising trend for U.S. market in the future.
And here in Korea, the Kospi and the Kosdaq both higher today thanks to buying by individual investors. What's happening in the Korean markets and your outlook for the days ahead?
Yes, if you look at yesterday's performance, it was quite weak. After it started with the very strong numbers for Kospi, but it ended almost 1% down yesterday. Most of the people were worried about the pandemic issues, but luckily we see the market recovering back again today as Kospi has risen by about 1% and Kosdaq is up by about 0.6%. The reason for this kind of rise is because of the manufacturing numbers are coming in better than expected. First of all, from the China side, the Caixin China manufacturing PMI came in at 53.1 in August, rising from 52.8, beating the market consensus of 52.6. So clearly, the numbers are better than expected, and it is the highest number expended most since 2011. So clearly this is a positive number. And also South Korea's manufacturing numbers affected positively as well. If you look at the market South Korea manufacturing PMI, it increased to 48.5 in August from 46.9 in the previous month. So clearly we are seeing improvement in the business cycle-wise. Clearly on the export side, these are things are looking better, while there's concern about the domestic demand because of the COVID-19 incident. All in all, we are seeing a, comparison between export versus domestic demand, where the export looking better than expected, while the domestic consumption looking worse than expected in the future. So we will see this kind of trend to continue in the future. But nevertheless, we think that the overall liquidity condition is ample enough that customer deposits rising in a rise speed, affecting Kospi to further go up in the future.
Well, you just mentioned your view about the Korean economy to some degree there, but the economy posting its worst performance in the second quarter since the financial crisis. What does that say to you?
Yes, if you look at the GDP numbers, it contracted 3.2% during the second quarter from the first quarter. It is worse than expected. But if you look at the estimation, it was 3.3% contraction, so it's slightly better, but not by much. All in all, the central bank is revising down these GDP numbers as it goes along, because of the worst than expected domestic consumption numbers. If you look at the second quarter, the domestic consumption was quite poor, and third quarter we were hoping that the numbers will recover. But still, there's a concern about the COVID-19, where it might move to 2.5 possibilities. And if that continues, then the second stage social distancing is quite a bit of a damper for the domestic consumption recoveries. But however, though, despite the concern about domestic consumption, as far as the export numbers are concerned, it is coming in at better than expected. And it is going down by about 9.9% year on year. But nevertheless, the number is improving. And monthly export dropping is going to be much less as we go into the future. Furthermore, if you look at the Japanese yen versus Korean won, Japanese yen depreciation has stopped, while the Korean won seems to be remaining weak. If that's the case, then comparatively, Korea's export numbers will be better than Japan, we think. If that's the case, then we think that export-related stocks will do better with the continuation of weak currency at the current point in time. So I think the question mark is domestic consumption versus export, and we prefer export at this point in time.
Got it. All right, Mr. Yu, thanks so much for coming on and sharing your insights today. Always appreciate it.
Thank you very much.